Lucid Group Inc. is currently trading at $6.53 as of the market close on Friday, May 1st, 2026. While the broader markets showed a bit of resilience, Lucid managed to claw back some ground with a nearly 3% gain during the regular session, though we saw a slight dip of about 3 cents in after-hours activity. It is a Sunday today, May 3rd, 2026, so the market is currently closed, but the energy surrounding this ticker is anything but quiet. Most people looking at this price think they're seeing a struggling EV startup barely keeping its head above water, but the reality is that we are witnessing one of the most aggressive institutional reshufflings in the clean energy sector. While retail investors on various investing sites are panicking over a 40% year-to-date drop, entities like Uber and the Saudi Public Investment Fund are quietly doubling down. The common belief is that Lucid is just another burning match in the EV space, but the deeper look suggests it's transforming from a boutique car maker into a critical infrastructure provider for the future of autonomous transport. When you pull up the Lucid Group chart on your Fidelity mobile app or check the newsfeed on your Robinhood app, the numbers look grim. We're sitting just a few cents above a 52-week low of $5.62, a far cry from the $33 highs we once saw. But here is the part that isn't making the headlines: the sheer scale of the recent $1.05 billion capital raise. Usually, a massive offering like this is a signal to run for the hills because of dilution, and yes, that risk is real. However, the composition of this capital is what matters. We have IR Third Investment, a PIF affiliate, injecting another $550 million, and Uber increasing its total commitment to $500 million. This isn't just survival capital, it's strategic capital. Uber has now committed to purchasing at least 35,000 Lucid vehicles for its global robotaxi platform. That is a massive pivot that most casual observers are missing. They see a car company failing to sell sedans. I see a technology company securing a guaranteed fleet buyer for its next-generation hardware. If you're managing your own trades through interactive brokers or checking your individual brokerage account, you've likely noticed the high volatility in LCID lately. The market narrative has been dominated by a supply chain hiccup that halted Lucid Gravity deliveries for 29 days earlier this year due to a seat supplier issue. That led to a Q1 delivery total of only 3,093 vehicles, which was a tough pill for the market to swallow. But the reality exceeded the negative expectations here, because despite that nearly month-long shutdown, Lucid reaffirmed its full-year production guidance of 25,000 to 27,000 vehicles. This tells us the manufacturing engine at their AMP1 facility is actually running much hotter than the delivery numbers suggest. They aren't lacking demand or the ability to build. They hit a specific temporary snag that is now behind them. This creates a classic setup where the stock is being punished for a past quarter's friction, while the future quarter's acceleration is being ignored. Comment below how many shares of Lucid Group you currently hold in your portfolio, and if you think the Uber robotaxi deal is enough to save the brand. Let's talk about the competition for a second. When people think about EV investments, they immediately jump to Tesla stock, Apple stock, or maybe Nvidia stock for the AI play. But the technical reality of Lucid's powertrain is still undisputed. The Lucid Gravity was just named the 2026 World Luxury Car of the Year. It beats almost everything else on the road in terms of efficiency and charging speed, adding 200 miles in about 11 minutes. This is why the Uber partnership is so pivotal. Uber isn't buying these cars because they look cool. They're buying them because the unit economics of a robotaxi depend entirely on range and charging downtime. If a Lucid vehicle can stay on the road longer and charge faster than a competitor, it's the superior business tool. This is the shift from luxury consumer toy to enterprise mobility asset. If you're using a robo-advisor or something like Schwab Intelligent Portfolios, these kinds of fundamental shifts often get lost in the automated rebalancing. But for an active investor, this is where the opportunity lives. We also have to look at the upcoming earnings report on May 5th, 2026. This is the big one. The market is expecting a loss, but the focus won't be on the bottom line. It will be on the cash runway and the progress of the midsize platform. Lucid is planning a vehicle under $50,000 for late 2026, which is their true shot at the mass market. Right now, they are a high-end niche player, but the capital from the PIF is bridge funding to get them to that high-volume midsize launch. When you look at investing sites or listen to the noise on SoFi Invest, everyone is talking about the current cash burn. And yes, it's heavy, about $1 billion in operating losses recently. But remember, the PIF has essentially infinite pockets and a vested interest in seeing their Saudi-based manufacturing plant succeed. This isn't a normal startup, it's a sovereign-backed industrial project. Institutional activity has been fascinating to watch. While some analysts at TD Cowen and RBC have been cutting price targets to the $8 or $10 range, the volume on the buy side during those dips has been significant. We're seeing a transfer of shares from weak retail hands to long-term strategic partners. This is often what the bottoming process looks like for a high-conviction tech play. If you're looking for investment help or exploring self-investing, you have to decide if you believe in the technology-first thesis. Lucid isn't just making cars, they are licensing their powertrain and software. That's a high-margin business hidden inside a low-margin car company.
Whether you use Robinhood Crypto for your side plays or keep everything in Fidelity mutual funds, a small position in a high volatility play like this requires an understanding of the macro environment. Interest rates are still a factor, and the EV sector as a whole is fighting a narrative of slowing growth. But Lucid is growing from a very small base, which means their percentage gains and deliveries can be massive compared to the incumbents. Let's get into the business model for those who are new to the story. Lucid operates a vertically integrated model, much like Tesla. They design their own motors, battery packs, and software. Their flagship is the Air sedan, followed now by the Gravity SUV. The recent expansion into Saudi Arabia with the AMP2 facility is a massive part of their long-term strategy to lower production costs and access the Middle Eastern and European markets more effectively. They aren't just an American company anymore. They are a global manufacturer with a footprint in the two most capital-rich regions of the world. For someone doing online investing through a SoFi trading platform or checking their individual brokerage, the global nature of this supply chain is both a strength and a risk. Tariffs and trade wars are the reality that could dampen the expectation of smooth global growth. The road ahead is paved with catalysts. If the May 5th earnings call shows that the supplier issues are completely resolved and that Gravity deliveries are ramping up, the stock could easily gap up toward that $10 analyst consensus. The expectation is a disaster. The reality might just be a recovery. We also have the looming speculation of the PIF taking the company private. This rumor has been circulating on every investment site and trading floor. If the stock stays this low, it becomes cheaper for the Saudis to just buy the whole thing and take it off the Nasdaq. For shareholders, that usually comes with a premium, but it also caps the moonshot potential. It's a tension that keeps the price pinned in this $6 to $7 range for now. Whether you're active on the Robinhood app or prefer the stability of Fidelity ETFs and Fidelity brokerage services, you have to respect the technical setup here. We are oversold on almost every time frame. The RSI is screaming for a bounce, and the short interest is high enough to fuel a massive squeeze if any positive news hits the tape regarding the mid-size platform or a new licensing deal. People are betting against Lucid because it's easy to hate on EVs right now, but professional traders know that when the sentiment is this bad, the risk-reward often shifts in favor of the bulls. It's about looking past the press release style of news and seeing the industrial reality. Lucid is building a moat made of patents and sovereign wealth. In summary, the contrast between expectation and reality for Lucid is at an all-time high. The expectation is that they will run out of cash and fade away. The reality is that they just secured over $1 billion from the world's most powerful fleet operator and a sovereign wealth fund. They are the 2026 World Luxury Car of the Year winners, with a production line that is finally starting to find its rhythm after a supplier-induced stumble. The stock price at $6.53 reflects the fear, but it doesn't yet reflect the Uber fleet deal or the mid-size potential. If you're looking for a boring, safe play, this isn't it. But if you're looking for a high-tech play that is being priced like a failure while executing like a contender, Lucid is the name to watch. Stay focused on the May 5th numbers and keep an eye on those institutional volume bars. The narrative is shifting from will they survive to how big will they get, and that is where the real value is found in this market. Lucid isn't just another ticker. It's a bet on the superior engineering of the EV future. As we wrap this up, remember that the gap between what the market believes and what the data shows is your primary edge. Expect the volatility, but watch the reality of the production ramp. That is how you win in this game. Like this video, comment your thoughts, share with your friends, subscribe for more updates.